The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. We got about 24 minutes to go until the start of trading, and we got action right now going on in the markets, pulling back from the highs we had overnight. Pretty similar action to what we had going into yesterday's opening bell. You trade up to 43.85, just like that, folks. I mean, you really look at the tick high that we got in the 2:15 a.m. bar. You're talking about a high of 43.89. So we're now at 30 points, exactly 31 from those highs that we had overnight as we trade into the opening bell. Tech stocks giving it up as well. You were up to a price level of 14,883, so more than 100 points off that price level. I just pulled up the Dow on the update. You're talking about 200 plus points to the negative side, coming down to those low levels we had towards the close of yesterday, 34,339 in the Russell. Right now, positive by 10 points, but again, giving up some of the action. Back to the S&Ps. We're going to put this thing on a daily. See the type of action we're talking about here. Been quite a September as we wrap up September today. We wrap up the quarter, wrap up a lot of fiscal years as well, with the new fiscal year for many starting tomorrow, October 1st, tomorrow. Pretty remarkable. There is September 3rd. That is Friday, going into Labor Day weekend, folks. You put it on the weekly, that's the high. No matter if you're on a weekly, if you're on a daily, no matter what you're on. September 3rd, the final Friday of the summer, we make an all-time high in the S&P. Excuse me, I meant to go back to a daily. And then since then, we've had some accelerated selling, folks. Quite a bounce we got when you look at the bump we got in terms of where we were last week. And that's going back 8 days ago, September 22nd. You really got a reprieve. But man, oh man, things really accelerating, whether it's Monday, Tuesday, Wednesday, and today's action. Is that today's action? Yes, it is. Today's action, as you see, I say pretty similar to yesterday's action. You see the tail to the upper boundary of the S&Ps. We'll see where we go, but that's not the kind of strength you want in this market. Note and bond market, though, pausing a bit. But man, look where we are in that market. You're talking about challenging the lower levels here as we have a rising yield environment hitting all stocks, especially those growth stocks. Taking a look at the NASDAQ 100, the 382 of just the run we had since May, folks. You're coming up to that boundary line now. We're talking about 14,630. Putting it on the Qs real quick. The Qs, if you run that same similar scenario in terms of the pullback possible, just from where we accelerated higher in May. Qs, you're right up near that level, 357.36. Keep your eye on the day of July 16th. We had 64.4 million shares. We have a high on that day of 355. Right now we have a bid ask of about 360 in the Qs. Taking that retracement off there, backing things off in the Qs. The channel line, I've talked about it many times. I mean, pretty remarkable that you're still in the channel line, folks. You get down to 350, 351, 352, you're still in the channel line. You get below there, that's where you really better watch out. I mean, nothing in the way of this thing coming down to whether it's the high volume day we had on May 12th, okay? But really, you want to talk about high volume days. Yeah, you got to go back to, let me just put this on a weekly to see the real acceleration. Where are we going back to? Yes, March of this year. That's what I wanted. And there's your weekly from about 324 to 297. We did 444 million on a weekly basis into that bar. We break below this line. Seems like the next stop would be at least a price level of 332, and that is going back to the week of May 10th. It's been quite a run in these stocks, folks. There's nothing preventing some selling. You have a lot on the table right now, whether it's the volatility going on with COVID. We've talked to Kevin Hinks. We talked to him after the break coming up, talking about the amount of jobs that got to get made up with the amount of people. And let's just jump into it right now for initial jobless claims. 362,000. Not too dramatic, but kind of sputtering across. You put it on a weekly basis. We were down as low as 312,000. That was the beginning of this month. Things ticking up, 335, 351, 362. Not what you want to see. In a healthy economy, you have 250,000 anyway. But this was supposed to be a roaring back of the opening up of the economy and people who are unemployed coming back to employment as those certain sectors picked up. Not exactly what we've seen so far. Maybe coming in the few months that are coming in the future, but all expectations continuing to build. Seasonally adjusted total was the highest since 377,000 in August 7th, so you're going back to that level. When you look at continuing claims, that number ticking up a little bit as well, drop of 15. So let's see, continuing claims, yes, an increase of 131,000. You have a 4-week average falling a bit because of where they are, but nonetheless, an actual acceleration of continuing claims up to 131,000. There are some holes in this economy right now, folks, and let's jump over to some of the equities that are moving. And man, Bed Bath & Beyond, they are moving, but not in the right way for bulls. Supply chain issues. It's going to be interesting to see who the winners and losers are, depending on your business. And sometimes, a lot of this was unforeseen, to say the least, for these executives. That's where a management team can really be the difference here, and not to put it on them, as in you can't really put the expectation as everybody's dealing with it. But you're going to see some companies really get hit hard by some of this, and you're seeing it with Bed Bath & Beyond today. You think about it, it's going to be the ones that are really dealing with a bunch of supply chain issues, right? It's interesting in terms of, is it going to be technology companies that can't get enough chips? Automakers can't get enough chips? Bed Bath & Beyond? They're just dealing with industry-wide supply chain complications, is how they put it, that they've been pervasive. Getting into what they're talking about, excuse me. Steeper inflation cost escalating over the summer, especially toward the end of its second quarter in August. Plagued by all these obstacles, they slashed its revenue and earnings outlook for the year, and its third quarter guidance looks underwhelming. Earnings, just 4 cents versus 52. The earnings are going to be where things really get interesting for this earnings season coming up. Earnings is where you're going to see all the supply chain issues have to do with wages, right? In terms of inflation, wages, cost of inputs. Yes, revenue may take a hit as well, but revenue, that's a pretty marginal miss, especially on a percentage basis. Earnings, they basically all disappeared, to put it bluntly. They lost $73.2 million a share compared with net income of $217 million a year earlier. Did you read that? They made almost $250 million a year ago, and now they're burning through money right now. Excluding one-time items, they earned 4 cents a share, but we don't get to exclude one-time items all the time. Bed Bath & Beyond is their symbol. The other one we have trading low is CarMax on similar deal. There's your acceleration on Bed Bath & Beyond. You're down a solid 6. Yeah, you're accelerating even lower, making lows as we speak this morning. CarMax out with their numbers last night. We'll get into those a little bit later in the program, but similar story. You're trading down about $12 on CarMax to $134.80. You take a look at this thing on a daily. You came into that with some lofty expectations. Let's put it back even a five-year weekly, right? You're coming into this thing at basically, not even basically, I'm sure you're talking about all-time highs. Yes, you are. All-time highs you closed at yesterday. And this thing trades down to 134. All things considered, folks, that's kind of the upper boundary line of where you've been for the better part of 2021, approaching 134. But a lot of negative action weighing on these companies, dealing with some issues, to say the least. Stay tuned, folks. We'll be back in 3 minutes. I'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&P is positive by 11 points right now. We have the NASDAQ 100 up 52, the Dow up 83, all the markets in the green as we have the final trading day of September. Wrapping up, let's jump over to our man Kevin Hinks from TD Ameritrade Network Fast Market. Every trading day, folks, 11 a.m. Eastern Time. Kevin Hinks, Alex Coffey, and the team breaking down the day's market action. And we got a treat because coming up Monday, we're going to have a new time for the program. We're going to make switching up things a little bit. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Yeah, as of Monday, October 4th, Fast Market will come on at 11 o'clock Chicago time, 12 o'clock Eastern, with me hosting. So
I love it. I hope
Tom White, a veteran trader, and myself, and things will get a little more fast-paced, a little more sarcastic, a little more edgy on the show. As well, that's the only way I know. So that's kind of what we have to do. So
let's bring the heat, man. I love it. I love the education and the conversation you guys have, man. And so, folks, you heard it. So starting on Monday, Fast Market is going to be coming up at noon Eastern Time. Larry Pesavento, Trade What You See, he will be in the 11 o'clock slot, so it's perfect. Back-to-back they go. And, man, that's going to be the start of the new quarter, start of the new fiscal year, start of a new earnings season as we come in, Kevin. So this morning, pretty interesting action as we trade higher overnight, Kevin. And already, kind of similar to yesterday's action, we've given up a decent chunk of the overnight gains. We have an initial jobless claims number this morning. All things considered, a little hot, you could say, at 360 and change. The market was looking for 330, but you're only talking about 30,000 jobs in the whole span of things. What are you looking at for this market this morning, Kevin?
Yeah, you know what jumps out at me right now, and you're right, Tommy, it's the last day of the month, it's the last day of the quarter. You've got a VIX at 21.5, so I would expect your viewers should expect a little movement today, right? Especially in the last hour, last half hour, things should get a little hectic. But at least to start the day, Tommy, we've got a quiet dollar. We've got quiet bonds, notes, and yields. So, and we've got 4 indices that are in the green, but not in the green that significantly. So that is, it's a cautiously bullish day in the market. I think there'll be two-way flow today for sure, just like we've had the last couple days. But I still expect, we weathered a nice storm here the last few days, And I think looking to third quarter earnings season and tomorrow's income and outlays number, I think we're setting up for, I think rates will be relatively quiet today ahead of income and outlays tomorrow morning. But I think all things considered, it should get a little interesting as we look to, the fourth quarter of the year and third quarter earnings season, Tommy.
Yeah, I mean, we're seeing some of the earnings. CarMax, Bed Bath & Beyond out today talking about supply chain issues or what they're dealing with. Back to just yesterday's, like you were saying, we do have a two-way market, man. Pretty amazing when you look at the S&Ps. Right out of the gate, 9:30, you had 30-point moves in both directions twice, Kevin. You traded 43.45 to 43.75. You gave it back up, and you did it again from about 2 in the afternoon up to 3, and you gave it up by the close. So pretty cool when you can get two 30-point moves in both directions in the S&Ps all within a trading day. Maybe that's contributing, like you say, to a VIX at 21 and change as we come into the final trading day. So CarMax and Bed Bath & Beyond, Kevin, some woes out there. Pretty remarkable. Strong numbers. I mean, both of the companies, CarMax especially, I mean, they're getting, I guess you could say, penalized because they missed on earnings a little bit. Comp sales not quite up for what the market was looking for. But, man, still strong numbers. They came into yesterday at an all-time high, trading down about $12. And Bed Bath & Beyond, they are having some supply constraints, dealing with pervasive issues is how they put it. Bed Bath & Beyond is down like 25% this morning. Is that a theme you're looking for as we come into the next earnings season, kicking off starting in October?
Well, I think Bed Bath & Beyond is a little bit of an outlier because you can say that even though their numbers are getting better, their overall numbers aren't getting better. And you've got TJX Home Goods, you've got Target really starting to chew in and eat their lunch. So I think Bed Bath & Beyond's under pressure from those other two, big companies that can really put it to you. So, I think there are some issues there with Bed Bath & Beyond. With CarMax, listen, CarMax sells used cars, where eventually what's happening in new cars is going to affect what's happening in used cars, right? It may not be right away, and used cars may benefit in the short term, but in the long term, we need those chips to get in new cars, and which will bring new cars to the market. That'll loosen up the used car market. And if you could have one thing for this economy right now, actually, you probably need two. You need workers on the ports to get those goods off of ships, and you need semiconductors back in the market to loosen up the auto market. So those two things are on my wish list for the fourth quarter, Tommy.
I like it. Get it done, man. Why not? I hear you. And CarMax, it's amazing being a public company, man, because the headline for CarMax is you could say that they missed estimates by 18 cents, making $1.72 a share. They had comp pre-owned car sales of 6.2%. Market was looking for 7.3%. But, boy, you look at the numbers, man. They have net revenue of $8 billion, up 48.7% compared to a year second quarter. They sold 419,000 units, Kevin, through their retail, up 19.9% from the prior year quarter. And I could go down the list, just amazing numbers. But they came into the yesterday at all-time highs, right? So sometimes expectations a little lofty. With all that in mind, Kevin, what are you guys going to be talking about today?
We're going to finish up the third quarter with Likefolio coming on. They'll have, as you know, they'll have a theme coming up. But, we're looking really now to start talking about fourth quarter and third quarter earnings season, Tommy. So I expect a good show. It's like I said, it'll be our last one in this time zone. So we'll do something pretty special to finish out the quarter. I don't have the names yet. I'm just
That's
checking
cool, man.
here. They didn't send me the names yet,
put
but
you on the
they'll come
spot.
soon, and it'll be, again, one of our theme-based shows.
Well, this is the last time I talk to you before Monday. We get the new program with Kevin Hinks, Tom White, 12 o'clock program, folks, Eastern time, noon. Get your lunch ready. Sit down with Mr. Kevin Hinks, Tom White, Fast Market. Check out that program. A little bit of edginess, as Kevin Hinks puts it, man. We look forward to it. And it'd be interesting, Kevin, when we come into the earnings season, they kick it off with banks, and banks with yields, what they're doing. That'll kind of be an interesting way to introduce the earnings season, especially this go-around. Well, Kevin, we appreciate the conversation, and we look forward to the program at 11 o'clock today, 11 o'clock on Friday, and 12 o'clock on Monday, man.
Have a great day, Tommy. Thanks for having me on.
You too, Kevin. Take care. Stay tuned, folks. We're going to be coming back in about 3 minutes. We got the S&Ps right now up 13 points. We got the NASDAQ up 62. All the markets in the green with about 3 minutes to go until that opening bell. Be interesting to see where we go in terms of yesterday's action. As I said, we're coming right into these areas. Yesterday's action, 2 moves in both directions. We're right in the middle of that zone right now as we come into the opening bell. The lower boundary, about 43.45. The upper boundary, 43.75. Made it up to almost 43.90 overnight. We're trade right now 43.64, and as Kevin said, last trading day of the month, and we got a VIX at 21.88. Stay tuned, folks. We'll be right back when the market open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the Den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get markets open and markets catching a little bit of a bid on the opening bell. We get the S&Ps up about 17 points at 43.67, the Dow up 147, NASDAQ 100 up 85. Let's jump around to some of the FANG stocks as we get the final trading day of September. Amazon shares up about 0.5% right now to 33.17. We got Microsoft shares 0.5% as well. We'll jump to Google shares right now, basically flat at 26.90. Facebook trading up about 0.4%. You have Chairman Powell in front of the House, I believe, today, wrapping up his 3 days in the press. Interesting to see whether we get any headlines out of that throughout the day. And we jump to notes and bonds. We got the 30-year basically flat at 131.14. The 10-year flat and the 30-year up one tick, almost both of them flat right now. And that is correlating too, as I pull it up, to a yield right now of just above 1.5%, I believe we're sitting at 1.54%, the yield on the 10-year. All right, jumping around to restaurants. We got a survey out here. Majority of restaurant operators say business conditions worse now than 3 months ago. And this is a number of factors there. You're talking about whether it's the Delta variant hitting demand, understaffed restaurants, and higher food costs among issues plaguing the industry. All three of them common themes. Under 10% of survey respondents, 9% said business conditions improved over the last 3 months. I mean, the whole premise of the whole economy just roaring back with all the jobs we lost in the service sector was the fact that the restaurants and hotels and travel would pick up and all those people would come back in force. And that's not quite what's happening, folks, just yet. And this needs to change if those things are going to come back. You're talking about 4,000 operators surveyed beginning of the month. Okay, this is the beginning of the month. Be interesting to see if this happened in terms of late September, if things had turned a corner there. Not sure. But during that time, I want to get down some of the statistics. Here we go. More than 3/4 of operators who took part in the survey said their restaurants are short on staff. Among those respondents, 83% said they are at least 10% understaffed. 39% are missing more than a fifth of their needed workforce. Right? That's a big one. Menu options are also being impacted by food supply chain challenges. Only 5% had not experienced supply delays. It'd be really tough right now to be in the restaurant industry and not be dealing with some kind of delay when you hear it persisting over so many different industries and sectors. Total food costs as a percentage of sales, check this one out, have also risen for 91% of operators. Who are the 9% that have not had a food cost rise? When you think about, at least in the CPI data and stuff like that, they take food out of it, right, to get the core number, etc. But if you're putting food in there, it's almost undeniable that that is rising. I'm almost surprised that it would just be as low as 91% and not like something like 95 to 99% of people are saying that food costs as a percentage of sales have risen. Jack in the Box, among restaurant companies that have announced plans to raise prices as costs of labor and food rise. I mean, you're seeing it, folks. You're seeing salaries rising as a result of costs of living rises. It's just, it's persisting everywhere. Most operators have a pessimistic view of the next 3 months. 55% of operators said they believe their sales will be lower over the coming 3 months. That's a tough one because what's probably happening here is that you've seen it in the likes of the big restaurants are flourishing. The small mom and pops, just not the same in terms of struggling to open back up, struggling to get employees back in, and struggling to get the traffic that they need in when you have COVID cases, unfortunately, spiking with the Delta variant right towards the end of the summer as we came into school season, especially Florida, one of the hardest hits of them all. Jumping back to CarMax real quick because it is interesting. So the headline again was that they miss on earnings and comp sales only up 6.2 versus 7.3%, and they're paying the price this morning. Let's see how they react on the open. But CarMax right now down 8.87%. Okay, now you came into yesterday's close at all-time highs, so expectations obviously above where the market was comfortable here. Pretty decent numbers, though. And, man, when you look at these numbers, though, it is so tough being a public company, folks, especially when you come in at an all-time high. Gross profit per retail used unit, they're making over $2,000 a car. If you're in CarMax, folks, there you go. You know the margin they're dealing with. They're making gross profit per retail used unit of $2,185, right in line of their historical. Wholesale gross profit was $1,000. So they don't mind pumping it out of the $1,000 on the wholesale level, but that's between buying and selling. When you look at it, they bought 364,000 vehicles from consumers in the second quarter, a 59% increase versus the prior year quarter. Approximately 188,000 vehicles were purchased from consumers through their nationwide online instant appraisal offerings. They're trying to get into Carvana's deal, right? Think about that. Instant appraisal offerings online, 188,000 vehicles purchased, more than half of the vehicles they purchased in that quarter. So they buy 364, they sell 419,000, they make about $2,000 a car, revenue of $8 billion. Big numbers across the board, but nonetheless, they are dealing with expectations that were above where they came in. And then Bed Bath & Beyond. Yeah, as Kevin was saying, they are in a different area. They are supposed to have a big turnaround going on, right? And they thought they were going to get it, as in, look at this stock down 27.8. It's not stopping here. You put this thing on a daily. Look at that run they had back in June. They really accelerated. That might have been a Reddit run because Reddit loves this stock, Wall Street Bets. You're back to, are we below these? Are we actually below any of these levels early in the year? That is trouble, folks. Let's back this up even further to find out. I mean, you're now below any of the lows that we had coming into 2020, let alone rising up to $50, rising up to $40. I mean, yeah, who knows where this thing goes. They're dealing with woes in terms of having to revamp their business. And August, they saw traffic basically almost dry up. The company saw steeper inflation costs escalating over the summer, especially toward the end of the second quarter in August, ate into sales and profits, slashed their revenue and earnings outlook for the year, and its third quarter guidance looks underwhelming. We went over their numbers in terms of they just completely missed on earnings. They actually lost $73 million. If you exclude one-time items, they barely made a profit. And yeah, I mean, they're spinning this in the best way possible, but saying they remain confident in our multi-year transformation. That means nothing. Any CEO would say that. So take that for what it's worth. Any CEO would say that. It means literally nothing to do with their sales and facts they had here. For the year, they lowered the expectations. They're now expected to earn between $70 to $1.10 on sales of 8.1 to 8.3. Previously, they were looking for $1.40 to $1.55 on sales of 8.2 to 8.4. Now, that would basically say that it was just this quarter that was a huge miss, because they missed by about 50 cents this quarter alone. And that guidance, yeah, maybe a little bit more, but they're basically saying the future months might be in line, and I'm not sure the market's buying that. Analysts were looking for $1.51 on 8.31. I mean, they're still saying they might come in at 8.1 to 8.3, but I don't envision that's the case if they're this much on the earnings front, especially. Earnings are going to be the deal, folks. Wages, inflation costs, cost of goods, cost of food, all of that stuff. You can sell the product, but how much are you going to have to spend? Look at FedEx. They had to spend almost $500 billion the final quarter of the year. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. The S&P is positive by 12. We get the NASDAQ positive by 94. The Dow positive by 10. A little bit of volatility to kick things off. Look at that acceleration in the Dow right now. You're talking about a 15-minute bar from when we just opened, a high of 34,427. And just like that, we're down 150 points in the Dow from that high. S&P's made it to as high as about 43.74. We're trading 43.61 right now, and we jump to the Dow. There you go, negative prices on the Dow. Just that quick, folks. The Russell only positive by 4 points right now. As Kevin mentioned, final trading day of the month and the quarter. Look for a little bit of activity in the final hour, potentially, of the trading day as we come into October trading, kicking things off tomorrow. What else we got going on? For all those in the know, we get the World Series kicking things off today. Today in Las Vegas, the World Series of Poker recommences after a 16-month interruption. Canceled last year with COVID. They did do some events online. You know, it's unfortunate. Now, this is an opinion piece written by James McManus. Not familiar. He seems to be a 70-year-old poker player that writes some articles about gambling for Bloomberg at 70. He's got no World Series of poker bracelets, a couple of comorbidities, and what he gets into here is just the decisions people are making. With COVID cases persisting, of course. Now, poker, folks, one of the most German-infested things you could do in just outside of COVID. You're sitting at a table with 10 people, as they put it, elbow to elbow. You're sharing cards and chips in the air. The dealers change every 30 minutes. The cards you're all holding, right? You're next to each other. It makes sense. You're sharing all things. You're touching all the same type of stuff. To Harrah's credit this year, and I believe Harrah's is Caesars, they instituted all players need to be vaccinated. I don't think there was another way to do it, folks, with the way that you're in everybody's faces at a poker table. You're changing tables, 10 to a table, all the same cards. But as he puts it here, there's always wrinkles in everything. It's just interesting. So table players must be vaccinated to participate. Dealers are encouraged but not required to be vaccinated. They will all be masked. Players are going to be masked in the hallways and the bathrooms, but they can go maskless at the table, keeping in mind that to be a player at the table, you have to be vaccinated. Be interesting to see what kind of numbers they put up there, but it's not going to be the same numbers that it would be outside of COVID if we would just get over this thing, folks, okay? If you want the economy to come roaring back, if you want something like this to persist, it's not going to be to the same degree. You have already people boycotting this because they want the players to be vaccinated. But nonetheless, poker is back now. Here's a transition to online. We all know that online gambling in terms of sports betting is the new rage, right? Disney talking about licensing their brand for billions of dollars. Florida looks to pass sports betting. I think they've already passed it. It's coming down the line. The one thing I'm going to encourage you folks, poker is not being included. Online poker in a lot of these. Florida in particular had to take it out to appease some of the more conservatives worried about gambling running rampant. So to put that in context, I'm going to be able to bet on NFL games as much as I want, where the house is taking a 10% vig, where it's basically an unbeatable game that's purely based on luck. Okay, now there are sports bettors out there in the world, folks, that do have an advantage enough over that house take. Okay, but what happens is to understand it, it's not a zero-sum game. Okay, some sports bettors can bet versus the line and beat it, but can you beat it enough to beat the house take? And in sports betting, that's like a 10% take, and that is really hard to beat in the long term. Poker is a game of skill, folks, so it's so backwards that states are going to legalize a game of gambling that has very little skill that determines if you come out a winner, because most sports bettors, it's just it's the house take, folks, and that's what most people don't take into consideration, okay? It's such a large vig in the sports betting world that it's almost insurmountable to beat from a player perspective, and it's unfortunate that you got states like Florida that are going to ramp things up for tax money on the sports betting side, and they're not going to allow online poker, which is a skill-based game, folks. In the long run, those good players, man, from my days of playing online poker, if you're not familiar, I'm going back really from the years of about 2008 or 2009 until 2011, I was heavily invested in it in a big way. And so I know people in the industry very much. It's much like trading, folks, and there is probability based. And man, you should see the graphs of some of these players that I'm familiar with. And folks, they are a straight line up to profitability over the long run. And it's just unfortunate that you're seeing sports betting taking all the headlines, getting passed everywhere, and online poker still going to be illegal, probably from a federal standpoint and from a state standpoint in Florida. Doesn't make much sense to me. Hopefully those politicians wake up, because that doesn't make much sense at all, especially at a time that I can just put my credit card in and spend as much money as I want on sports betting. Doesn't seem right, to say the least. All right, I'll get off that soapbox. Let's jump to natural gas. You want some volatility, folks. Natural gas dropping 7%, the sharpest decline since January. Now, this was yesterday's action. We're going to jump into natural gas right now. We get natural gas up 8 pennies. Look at that drop, though, from where we were. Tuesday action, you're at 6.28. By Wednesday action, you're at 5.35. You almost lost a full dollar from the overnight highs in crude to Tuesday to the lows of Wednesday. You put this thing on a daily, and man, that is some volatility, folks. The run really begins, August 25th. You trade to a high of 565 in natural gas. You pull back to the 50% retracement, and then you take off to the top side yet again. Now, what was that? We were dealing with an ABC potentially of 385 to about 565. So what is that? $1.80 potentially. And you almost got there from 475. If that would be your C point, what would I bring you up to? 655, and we got to about 631. Nonetheless, volatility all over the place in natural gas. Gold finally getting a bid. Been quite a tough slide for gold, quite a tough September. Look where we were when we started September. September 3rd, you were sitting at 1836. You finished the month off about $100 lower at 1738 in the price of gold. Silver, taking a look at where we've been this month. You kick things off in similar fashion. That Friday before Labor Day, we're trading at $24.94. Silver gives up $3.20. Silver is just, man, watch out for silver. $21.78 in the price of silver. And jumping back to the markets, S&P's up about 15. Let's jump down the line to some of the other stocks making moves in terms of specific equities. Virgin Galactic trading higher in a big way. Talk about volatility. The FAA concluded a probe on a July 11th flight mishap and allowed the company to resume launches. I'd be careful of this one, folks. Because, yeah, you're up 10.3% today. But, man, if you remember, the day that Branson went into space, this thing was trading at $54. And since then, the market has been cut in half, even with what we're looking at right here, 25.37. You were down to 14.27. They might be around in the long term, but they got a long time until they start making any money off of space tourism. They want to make some money. They got to follow the Elon business plan of getting Defense Department contracts, because that is the path for those space companies in a big way. And just like that, They're buying the dip, folks. We got the S&Ps popping. We're coming up to the session highs. We had a 43.71. The NASDAQ catching a pop as well, making session highs 14,873. We'll jump around to some of those tech stocks. We'll take a look at what else we have moving on Thursday action. Stay tuned, folks. I'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets in positive territory. Last trading day of September. Let's jump around to some of those FANG stocks and see how we're trading with the NASDAQ 100 catching a bid right now, up about 0.8%. We got Google shares trading higher. Come on, keep up. Up 0.6%. We'll jump to Microsoft. Microsoft had really pulled back this week. Microsoft up about 1% right now. We jump to Amazon shares. Amazon up 0.6% right now. And the big dog Apple shares about 0.5% in the positive. I was talking about the World Series of Poker. They were talking about when you can watch it, where you can watch it. So there is the schedule as they kick off today. Always pretty cool. Event number 1, casino employees. That's what kicks things off. You got to be a casino employee to kick things off on event number 1. Event number 2 kicks things off. How about a $25,000 horse event? And if you're not familiar, that is Hold'em, Omaha, Raz, Stud, and Omaha 8 or better, which is the E standing for. That's a big time event up there on Thursday. Today, September 30th, they kick things off. Now, if you're talking about where you get to watch it, CBS is going to be one of the partners out there, and they have Poker Go is one of the streaming apps. But CBS will have some, but if you Google it, folks, Poker Go, if you're into it at all, World Series, it's a cool event. Talk about high stakes, decision-making process, probability-based. I encourage you to check it out. Always cool seeing some of that action. Speaking of action, we got right now, let's jump over to the VIX. Volatility Index, 2131. All things considered, a pretty relatively high volatility index when you look at the positive market action we've had. I just went over. It's been a tough month of September when you put this thing on a monthly. Okay, let's run things over into the full COVID. But man, folks, you know, we're going to have some red months occasionally, okay? That's not what a sell-off in a bear market looks like. I mean, we just rose straight from the ashes of 2174 to 4549. That's an all-time high this month, okay? And yes, we have a red bar that erases what we did in August. But man, we're basically just back to where we closed out July. And you only had 3 months in the red prior to this month, going back to the lows of March. Crazy. All right, folks, stay tuned. We got our man Basil Chapman up next. Fast Market at 11. Larry Pesavento at noon. Steve Rhodes, Dave White, Tom O'Brien all this afternoon. Have a great Thursday, everybody. Stay tuned.